The healthcare sector might ready to be taken off from here as it's gotten beaten down over the last couple of years. Now, there's still some ups and downs, some uncertainty, the UNHs, the Eli Lillys, the CVSs, your retail chains, drug companies, right? You may be frustrated with them yourself and you're like, I'm not dealing with it, Brian. But from a stock perspective and some money making opportunities, this may be a sector that could create some back to the upside opportunities for share buying and also long dated call options. All right. So without further ado, let's talk about it today, why this sector may be slept on and may be a money generator for the summertime and potentially throughout the remainder of 2025 and beyond. All right. So my name is Dr. B. If you're not too familiar with who I am, you can read down below more so on my website, brianmcelderry.com. You can join our Discord, which is our community, our financial education community, our holistic community full of professionals, entrepreneurs, people that just want to better themselves personally. And also, if you want to join, any further mentorship or consulting opportunities with myself, you're more than welcome to book a call and we'll talk further from there, fill out a small form, and we'll go from there on how I can support you along your journey. All right. I'm a former pharmacist, doctorate in pharmacy. That's where the doctor comes from. So I do have a little bit of background in this particular space and I can give you a holistic perspective. All right. Okay. So I have, as you've seen some of you before, I am an educator, a coach, a teacher, mentor, all those good things. So I know there's people out there that appreciate some notes. Okay. So the healthcare sector has underperformed the S&P 500 in the past couple of years, but because it's a defense sector, a safety sector, people have Eli Lilly in their portfolios, right? They had UNH in their portfolios. They have ETFs that include these companies, right? Maybe Merck has made you a lot of money and mRNA made you a lot of money. Pfizer made you a lot of money back in COVID times and they've been beaten down. You're like, I don't trust this stuff for nothing. Okay. CVS is in a lot of people's portfolios. With the S&P 500 healthcare sector gaining only 2.06% in 2024 and the S&P gaining 25%, so a lagging sector. Now, if you did not know this, the healthcare sector is one of the top 4 major sectors that moves the markets. So finance, tech, healthcare, and retail or consumer discretionary. All right. This underperformance has attributed factors like investor preference for high growth stocks. So I want more growth in a shorter amount of time, concerns about policy uncertainty. So a lot of these policymakers that are saying the drugs are on, the drugs are off, right? A lot of the GLP-1 companies, right, trying to get weight loss drugs out there. That's what they've been pushing lately to increase their profit margins and bring the healthcare sector back up, that people may want to pour money into their particular company's stock positions. The cyclical upswing in global and U.S. growth, valuations across the sector have come down to attractive levels after a period of lagging broader market. Okay. So I'm not going to read all through this. If you want to screenshot it or just scroll through it here as I go through it, you're more than welcome to pause it, read it yourself. But I'll read through why this potential downturn has happened and the potential for a turnaround. There's easing profit margin pressures. Okay. So a lot of these companies, as I just said, their profit margins are starting to increase yet again due to some new drug releases, some potential easing of policy, and they're able to profit a little bit more now. And we don't know what's going to happen with these tariffs. And I know some of you might be, well, Brian, what about the pharmaceutical tariffs? Is he going to initiate? I'll get to that on the charts. I didn't say that we wouldn't have some turbulence, but I'm saying that in the short term could be some upside potential for the remainder of the year and a comeback for the healthcare sector. Shifting payer mix. So the number of people using government health programs has increased, limiting providers' earnings. However, this trend is expected to improve as the commercial segment rebounds and certain government subsides end. Okay. Policy uncertainty. This is a big thing here. We don't know what Trump's cabinet is going to do, what Robert Kennedy is going to do. And there's still some uncertainty around Medicare, Medicaid, and a lot of these programs that are in a headwind right now. Long-term positive drivers. We have a shift in generations that is coming right now. We have our baby boomers that unfortunately, for some folks are passing on, right? They're passing on. We have Gen X that's getting a little bit older. We have millennials, which I'm a part of, the older generation of millennials right in the middle. Okay. In my coming into my late 30s now, where we're starting to be caregivers. We're starting to be those people that are making decisions in businesses, and you're starting to be in that managerial role. You're starting to have your family, right? So we're having generational shifts where these long-term drivers of healthcare are going to start ticking back in as generations start to change. Innovation, big thing here. The sector is innovating consistently. New drugs come on the market. We know that's $1 trillion industry. It's not going to stop. People are going to get unhealthy. They're going to pass on, right? Things of that nature. And life insurances are going to start kicking in, whether you like it or not. Medicaid, Medicare bills, healthcare bills. Unfortunately, that's just the name of the game. So I'm talking about it from a benefit from the stock perspective. All right. So in summary, the healthcare sector is a defense sector, historically resilient performance during economic downturns. So if we do have some tariffs that might hit the tech sector, and yes, those stocks are going to grow, but they're very, very volatile, right? Nvidia went down to $86, went back up to roughly 140 at the time of this recording, and potentially could come right back down to 100 and then back up to 200. So over the long term, great. But if you want some stability potentially where there's not a lot of volatility, this healthcare sector could be something that could be attractive to you. All right, so let's jump on the charts. My favorite place here, and I'm going to show you the sector. So XLF, the finance sector, if you look at that chart from a weekly perspective, okay, let's look on a weekly. This stock from the 2023 lows, okay? This ETF is up 74% from the 2022 lows. XLK, okay, the tech sector, we're up from the 2022 lows 120%. The consumer discretionary sector, retail, okay, let's look at it from the 2022 lows. At the high, 94%. So almost 100% return on your money in roughly a year and a half, almost 2 years now. Okay. And the healthcare sector, 2022 lows, which was this consolidation right here, lagging behind slightly at 30%. Okay. So there's a visual on the charts of how you can see 120% return, 90% returns, 100% returns on the top 3 sectors, and healthcare still moving up. But now guess what? As all these other sectors have, risen from that dip buy opportunity and maybe getting a little bit overextended, you can still hold them. But where is big money going to be potentially moving their money over the next couple of months if they decide to take some profits with these tariffs in place? XLK, right? Tech sector, the bottom was at 174, went to 234, as we said. XLV, the consumer discretionary, retail, 171 up to 215. So Amazon, Walmart, things of that nature. Best Buy, all those retailers. And look what's down. Okay. If you're a structural person or you're still trying to learn the charts, this is a head and shoulders formation. As you can see right here, broke that yellow neckline, as we call it, and broke back underneath this 136 for the healthcare sector. But it's back in this channel and back at a previous high. And if I look at the RSI, relative strength index, which tells us overbought or oversold levels, if I look on a daily, that healthcare sector is getting a little bit oversold again. So another buying opportunity. Okay. So this is the ETF of the healthcare sector. And you can see today, which is why I'm bringing this video to you on May 15th, right, 2025, is because we're starting to see some type of buying and some short sellers being maybe potentially squeezed out of their position in the short term. Okay. So with that being said, let's look at some of the companies that are in the healthcare sector, and I'll go to my healthcare right here. I've got XLV, again, buyers. You could consider this maybe a double bottom. Nice candle here on Thursday of this week, and we'll see how we finish tomorrow. But I'm liking some of these that are picking up. Okay, so let's go to UNH. Okay, UNH took a nosedive, and a lot of people have concerns about UNH, and maybe you have United Healthcare as your insurance provider, and you're like, I don't know, there's too much drama going on. But this is why we look at the charts, is because guess what? There's going to be manipulation, right? 2 things happen when you have recoveries in the short term. Number one, short sellers get squeezed out of their position. So if you were short, right? Meaning puts, or you're short selling with equity, okay? And you're shorting this all the way down. Well, guess what? You're probably going to take some profits if you've rode this down all the way to the bottom of this previous high, okay? So previous highs become support, okay? That is how the stock market works. And if I have this trend line here, and I come from that trend line perspective, and I'm on a monthly, look exactly where this trend line is hitting. Trend, and right there, buying right below that trend line, and we close right on top of it, okay? With some buying and some short sellers being maybe squeezed, maybe some profit taking happening on the short side, which will initiate some type of reversal in the short term. So this is one major one that I know a lot of you have added into your portfolios. Maybe you've been getting beaten down in some, but I would highly consider, as I look at the RSI on a daily now, okay? RSI on a daily is significantly overdone, okay? The longer it stays down here in those oversold levels, the more you should be accumulating and liking it in the short term, and you can reanalyze if it is on a full recovery or not. But I guarantee you, you can revert back to this video and say, man, they're always trying to manipulate us, because there will be some type of news that comes out and says, hey, new CEO's great. The whole investigation has been dropped. We don't see any Medicare fraud, or if they do, right, it was null and void. It was a mistake, all that kind of stuff. Okay. And you will see a recovery from UNH. Okay. Now, the thing that I liked about today, which is I missed my entry on this, but what I liked about today is that we finally see some type of buyers and maybe short, squeeze sellers that are being squeezed out. We start to see some type of doji candle. So this used to be a solid red candle and got bought back up today. Okay. If you look at the previous candles on the daily, strong seller candle, still strong seller candle, right? Still strong seller candle. This is the first time we've seen some type of buyer candle right here, right? Towards a higher time frame daily. If we look on a 4-hour, you can start to see maybe a hammer candle that's forming and some type of potential reversal, right? If we can clear out some of these previous stopping point highs, I think personally, if we can get back above 300, that is where the buyers and the squeeze is going to start happening. Okay. We're going to start clearing out some of these levels of this downtrend, and we're going to start seeing some type of reversal. Okay. Now, this may take a couple of days, because we can maybe see another little reversal back down into 250, 260. That's a possibility, because Brian, well, what happened right here? I thought this was the reversal, came down. Thought this reversal could come back down, but you want to get interested in an area. Okay. So in my opinion, a UNH is, in my opinion, a no-brainer to add if you're a share type of person. If you're a long dated call type of person, I think this is a leap opportunity here. So this will go into January 2027 if you got the funds. $350, paying $4,000. And that $4,000, in my opinion, will start turning into 10, 20, 30,000 in the next year or so. So if you got the cash, that would be the contract I would look at, spending $4,500 roughly, and having that $4,500 turn into 10, 20 grand. And you don't even have to wait for that long. This could happen it could be back at 350 by the end of the summer. Okay. So that's a long dated call option. Here's another one. You could look at January of this next year. You could look at a little bit shorter one. Maybe we look at potentially 350s here, and that's 2,700 roughly, or this 400. You can go further out of the money potentially and getting back up into the 400s. All right. That's a possibility for sure. In the short term, like you said right now, Brian, what are you looking at? I would say probably July and August contracts is what I've been, relaying to my community, spending this 350. I have 350 and 400 as my price targets in the short term within the next month or so. Okay. August, I think it's a great one here. And then if you're looking for super, super short term and you think a reversal is going to happen, I would look at June 20th. Maybe you can day trade this. A lot of volume coming in on this 300 contract here. There's some volume coming in over here. Very little volume, in my opinion. Maybe it gets back down to 230, 240. That's my bottom end. But if you got the cash or you got the available funds to go ahead and start, I think this is going to take off in the next week to 2 weeks and by the summertime. Okay. This could happen in one day. Okay. UNH has the possibility to move very similar to here from 513 to 600 in 1 week. All right. So get very interested here, in my opinion, on this type of bottom tick. Maybe you wait tomorrow and then start next week taking a look at it. But if you want more detail, you can join our community. I'm giving more in-depth levels, and that's kind of a little promotion here if you'd like. A little bit more insight as to, you see there, mRNA I'm looking at, right? And we've got our full levels on UNH. I'm giving a full update every day with the chart, where I'm liking it, where is an entry point, the specific contracts. So I'm doing the work majority of the time for everyone. All right. Cool. All righty. Let's jump into a couple more and I'll let you go. Moderna and Merck. Okay. Moderna, getting very, very interested in. This could be a trade potentially for the next week or so. Okay. So I'm going to give this for free here on this YouTube channel. So let me know if you benefit from it. Okay. If Moderna breaks back above 24, it's headed directly to 25 and potentially 27 squeeze in the next week. Okay. So if it reclaims $24, gets back above 24, it's going to immediately, in my opinion, go based off technicals to 25, and it could reclaim this whole move back to 26 and maybe even $27, right? So that is the idea I'm looking for. Why I'm looking at that is because there's a lot of heavy volume on these contracts right now. Look at the amount of volume that's starting to stack up on 25 calls for next week, right? And 27 calls for next week. Well, how much are these, Brian? $18, $55. The safer one is the $25 contract, because that's very realistic, but the 27s could move in the short term. This would be a day trade idea for potentially for tomorrow if you're seeing this video, or the beginning of next week, right? So pay attention to Moderna. It could get a little nice short squeeze if it gets back above that 24, or it retains above 2350. Okay, retains above 2350. You kind of can see this double bottom here. It likes that buyer range right around this area. That's 1, 2, and 3 days. It was from 23 back to 26. It's right there again. Can squeeze back to the highs one more time. Now, that's a short dated contract. What I would look for ideally, and I understand, do your own due diligence with this, because Moderna, a lot of people have questions. This was a COVID vaccine type of thing. It was the same type of situation. Healthcare sector was beat down. We were going through an economic time, right? It was in Trump's office. So you now have this scenario somewhat again. So you want to buy companies in the short term that could have a nice recovery. You see what happened back in 2020 right here, right? It's back to 2020 levels at 23, 24, $25. Gets above 30, it can start moving for whatever reason. Okay. Whatever reason. So make sure you do your own due diligence about this. It's on this trend line, third touch, 1, 2, 3, and starting to consolidate down here very tight in this tight wedge range, and could break out back to 40, back to 50 will be my short terms. I'm not even thinking back to 100 plus unless we have another pandemic and they come out with something, a partnership, or someone buys them. All right. So Moderna, pay attention to this. This could be also a leap opportunity going out into January 2027 or January 2016. And you could look at those and just let it ride up. All right. For very little money, you could look at the 50 calls and consider that, and still day trade it if you want without much risk. All right. If it breaks below $23, gets into the 22s, it's come back to 20. Okay. But get very interested about Moderna here at these levels. Merck, I like as well. Okay. Reason I like Merck here is because, again, oversold on an RSI on a higher time frame, a monthly. Do you see this right here starting to get at 30? Okay, look what it did when it got at the top in the RSI, right? Sold off. Weekly, starting to consolidate here at these low RSI levels, ready to break out, in my opinion. Okay. Third touch of a trend line downtrend, 1, 2, 3. And all we need is a slight little indication of a reversal, which could start happening in the short term. So you can get some exposure. You can see here starting to, get some buyers stepping in, just can't get any continuation. So with this on Merck, right? And I'm talking about this within a month to 2 to 3 months. This is throughout the summer. If you want to day trade it, you're more than welcome to, but I'm thinking about contracts into August just to be safe. All right. So Merck right here on a shorter time frame, 4-hour daily, double bottom here, right there, double bottom. You see this downtrend, big break there, right there from their earnings, just kind of pull back, and now a double bottom, failure to go lower. 1 time, 2 times, starting to form a little breakout here. Breaks back above $76. Okay. Maybe 75. You could start paying attention because it moves. Okay. So it'll be, you can see what happens here. This is on a 4-hour time frame. The whole day gets back above 76, doesn't stop until 80. So Merck moves very, very well. Breaks back above 76. We could have the same type of movement, and this could take out the high, or at least try to, in my opinion. So watch Merck. I'm going to show you the contracts here for next week. If you want to day trade it, volume picking up and open interest picking up on the 79 contracts, 80s, even 84s, right? Not much coming on the put side. Doesn't mean it can't, but that's just an indication. And if I go further out to June, that's where it truly picks up. Now, those are pretty cheap. I'm not too big on $5 to $10 contracts. They could move. That I consider those lotto contracts for my community. That means they're so cheap that why not, and see what they can do, right? Without any risk into it. Can it go to 100 within a month based on this healthcare sector? Hey, they got earnings coming up in, when's their summer earnings typically? End of July. Okay. End of July. So can Merck right here, July 29th, can Merck do something like this? I wouldn't put it past them. Merck is a sleeper a lot of times the way it moves. So I would not put it past them. Start making some moves. I think people are seeing the risk to reward on the positive side, that it's a very little risk, high reward at these levels. Okay. Especially from sectors being beaten down, especially if they take profits from tech, rotate it into here. July 18th. Can look at those contracts as well. Okay. So pay attention to Merck moving up into their earnings potentially. My targets on them is 80 in the short term. Okay. Maybe 85 as a rotation if we start closing strong and breaking out. 85. And then, above 85, above 86, it's back. Okay. Above this 86, you can see this level here. Those are my targets. 79 to 80. Gets above 80, I think we're going to start getting some quick movement here to the upside. So I like this chart. I like how it's downtrending, broken out today, double bottom, failure to go lower, break above 76, go into 79, 80, and then 85. And then you're just targeting these previous highs over here. There's 90. Targeting that high, 96. And there's 100 before you know it. If it starts reclaiming above 80, okay, that's when the takeoff, in my opinion, is going to start really, picking up a little bit more. See what it did last time here at 79 to 80, went to 90, went to 96. So Merck, UNH, Lilly. I'd like to see Lilly. It has a little gap fill here. I mean, it is going to move with the healthcare sector. Maybe if it starts to hold this in 750 and gets back above 750, does have some gap to fill the upside. So I'd rather it have, come down, fill this gap. But if it holds these lows with the healthcare sector and the healthcare sector starts picking up, right, 725 or so, you can see there's a lot of buyer interest right here, 725, 740, and then reclaim 750. We could start, going if the healthcare sector moves XLV as in Victor. All right. CVS, same kind of situation here. CVS had pretty good earnings, rebounded really, really nicely. Does have some support here around $60. We saw a nice hammer candle off of there. So CVS, hammer candle on a daily, that could start reversing. You see the same setup is happening on almost every single sector today every single stock in healthcare. There's Johnson & Johnson. Let's see if Pfizer was doing the same thing. Yep. Amgen. Yep. So you're seeing it across the board. All right. So thank y'all so much. A little bit longer video, but when I've had these in-depth analyses, I really want you to take heed, be able to watch it over, do your own analysis, and make your decisions. If you're inside of our community, you can follow along. Right, the link's down below to join Leverage University. We'd love to have you. Should be a little small discount code there for you to join. And the time is now because we're starting to wrap up an interesting time in the markets where some sectors are oversold, some sectors are overbought, and we're going to have a rotation very, very soon. All right. Love you all. Peace, love, and blessings. Talk to you next time.